Hey guys, David here. Welcome to Digital Outlook. In today's video, we're going to talk about an element that will either make or break your investment strategy. But before we do, if you'd hit that like and subscribe and tell your friends and family so we can get this information out to as many people as possible, that would be fantastic. So, without further ado, why don't we get to it? So guys, this video that we're doing today is because some of my subscribers have requested that I talk about this subject. And you know what? This subject is actually quite an important one. In fact, it can really make the difference between you being a successful investor or getting absolutely decimated. So quite important. So what am I talking about, guys? Well, I'm talking about understanding risk. Now, what is risk from an investment standpoint? Well, guys, risk is the potential for loss in any kind of an investment. And that's what risk would be defined as when you're talking about investing. But now, what I want to clarify is people have different levels of risk. Now, if you've watched my videos but in the past couple of weeks, you may have heard me give this example before. But this is how I help myself determine the level of risk that I'm willing to take when it comes to an investment. And that is, how apt am I to actually risk losing the money I'm investing? Well, for me, let's say I have 10 bucks in my wallet and I lose that wallet. Okay, it happened. Now, let's say it's a couple $100 and I lose my wallet. Oh well, okay. Well, what if it's a couple thousand or 5,000 or 10,000? Ouch, right? So now I know my risk tolerance. How much am I really willing to lose? Now, guys, when it comes to some of these investments, you can mitigate your risk by understanding the type of investment that you're getting into. Some are way more risky than others. Now, when it comes to cryptocurrency investing by and large is far riskier than stocks and bonds and those things like that. In fact, with bonds, you're almost given a guaranteed return on that bond over a period of time. And you know that usually going in and you lock your money in. So there's very limited to low risk in bonds. Now, with cryptocurrencies, there's different levels of risk there. So guys, there are certain projects that are based primarily on sentiment. Now that is where people feel like, hey, this is going to be a great one and I believe it's going to go somewhere, but right now it has no utility, but hey, down the road it might. That is the sole driver of the price action in those projects. Now for me, I personally stay away from those. Now that does not mean that certain projects like that can't actually make you a significant amount of return. Give you an example, Shiba Inu. Shiba Inu is a meme coin, meaning, it's just kind of like one of these ones that is associated with, a particular dog breed, like Dogecoin or whatever. And when Shiba Inu first came out, it had no utility, none whatsoever. But it had huge market sentiment. And what happened? It just took off and made a lot of folks a lot of money. I personally was not one of those. Now, why? Because for me, guys, when it comes to risk, there are 4 things that I'm going to look at in any investment. I'm going to look at the real world utility. Shiba Inu didn't have one for me. Now, I'm going to look at the management team. Who are the people who are leading the project? Now, I'm looking for people who have background and are established and have real world connections. The next thing I'm looking at is strategic partnerships, where you have a huge network of worldwide strategic partnerships, and that is very important to me. I'll give you an example of one that I like a lot, Hedera Hashgraph. Now, Hedera Hashgraph has a fantastic management team, and the governance board and those that own Hedera Hashgraph are some major fintech names like Google and IBM and the like, okay? Now, the 4th thing I look at is price action. Well, of course, with Shiba Inu, because it was new, it had no prior price action, none whatsoever. So I would not have touched that. Now, the ones I have gotten involved with are most of the ones I'm exposing on this channel. And guys, you need to know that I fully believe in these projects. And the reason I believe in them is because I have done my personal due diligence to go in and learn as much as I possibly can about them. And that caused me to feel much greater level of confidence in order to invest in them. And for me, that helped minimize that sense of risk that I had. So, management team, management team that has strategic partnerships and some historic price action. Well, guys, one of my favorites, XRP. Well, XRP is primarily driven by Ripple, and Ripple has some amazing people on their board of directors. Now, you just take a look at some of the names on there. You got Brad Garlinghouse, one of the best CEOs I think there is in this entire crypto space. You've also got Rosie Rios on there. Now, guys, I would ask you to take out a $100 bill, even a $20 bill, out of your wallet, and you look at who signed that on behalf of the Treasury. It was Rosie Rios. Guys, these guys have a huge management team. Now, on top of that, what about strategic partnerships? Well, we know for a fact that Ripple is interlinked with so many of these major global organizations, the International Monetary Fund, the European World Economic Forum, the Bank of International Settlements, and they've got all kinds of relationships with all kinds of various banks around the world. So that's another big plus for me. And then they have price action. Guys, when I saw that XRP back in 2017 on January 4th was trading at 0.006, and then just 1 year later on January 4th of 2018, it went to $3.84, and I could see the historic price action. That was a big changer for me. So for me, getting involved with XRP, XLM, and all these ISO 222 coins is a very secure investment from my perspective. Now, guys, what did I do there? I did my due diligence to assess my risk management. Now, guys, when it comes to the amount that you're going to invest, dollar for dollar, guys, this is where you need to determine your risk for loss. Remember that wallet example? You can use that one if you like. But another thing I would recommend that you do, don't make a decision like that in isolation. Actually, sit down with your husband, your wife, your parents, or whoever, and just let them know what you're interested in doing, why you feel comfortable in doing it, and kind of get that kind of counsel. Because I'm not telling you that, hey, these are bad investments, don't do it, blah, 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 blah. But I'm just saying you need to know your personal risk appetite. Now, maybe for some of you, you don't even need to question somebody else. Maybe you have a discipline that you employ to determine your risk. All I'm saying there, guys, is know what your risk is. And in doing so, you're going to save yourself from some huge pitfalls. Now, guys, I've made my own mistakes. So early on when I was getting into this space, I didn't do my 4 due diligence things. I saw this one project and I invested in it and didn't look back. Well, guys, I lost thousands of dollars on that trade. It was a complete rug pull, but I learned a lesson. I learned not to stray from my disciplines of looking at that real world utility, that management team, the strategic partnerships, and the price action, and not to allow my emotions, the FOMOing in to a project. Now, guys, having said that, there's two kinds of fear that you need to be leery of when it comes to investing. The first one is fear, uncertainty, and doubt. And if you're in this space for any length of time, you're gonna know it, you're gonna hear it. It's called FUD. Now, what's happening there, guys? A lot of times there are people who are working against your project sometimes. They might even be trying to short it. But oftentimes these are market makers that are putting information out there to scare you from either not investing or letting your investments go at rock bottom low prices. Now, guys, it has been my experience that the worst time to ever sell is when things are on the floor. But that's the time that all this news media gets put out into the major marketplace saying it's too risky, it's so scary, you don't want to buy now, you want to buy later when it's just going sky high. Now, when it's going sky high, guys, they call that FOMO, the fear of missing out. And so at that point, guys, you have all these news articles and stuff coming out saying, now's the time to buy, get in, get in, get in. Well, what do you think those guys are doing? Same guys that were telling you to stay out way back there. Well, when they're telling you to stay out, most of the time they're the ones getting in. And when they're the ones telling you to get in, that's when they're getting out. That's how these markets work. It's manipulation all around, guys. And so what I'm saying there is, do not make any investment decision based on fear. Fear of losing out so you sell, or fear of missing out so you get in. That's vitally important when it comes to risk management. Now guys, this is the video I have for you today. I hope you enjoyed it, but feel free to make your comments down below. And whether there's something I missed that actually would apply, you put that down in there. And if you disagree with my synopsis on things, that's okay too. You can put that in as well. All right, guys, I hope you enjoyed it. So guys, sorry about the wind today. Hopefully we can get that cleaned up a bit. It was pretty windy out today. But before you go, just take a peek at this absolutely gorgeous area out here in Adriatica in McKinney, Texas. It is just stunning. Amazing. So guys, as you know, I'm not a financial advisor and this isn't financial advice, but if you found value in it, if you'd hit that like and subscribe, I'd appreciate it. So in the meantime and in between time, stay safe, be blessed, and I'll catch you in the next one.